Okay, guys, I believe that now you should be able to hear me. This is Jose here. Please give me some confirmation about it so we can start. Okay, perfect, guys. Well, again, apologize, guys. We should have started doing our trading 30 minutes ago, so that's really not ideal. But anyway, guys, let's focus on the trades, and we'll do our best. Silly mistake on my side, guys. You know, you will not believe it. I had a backup stream running full speed, and it was basically interrupting the upstream that I am sharing with you. But at this time, I would guess that everything's gonna be fine because I interrupted the backup. So, you know, I'm looking on my side and everything looks great. Okay, so let's go for it. So again, we're gonna start from the beginning. Okay, guys. So first of all, Lily. So what do we have with Lily? With Lily, we have a stock in an uptrend, approaching a green UFO, but as I was saying earlier, unfortunately, the red UFO happens to be too close. Okay, so there is not enough room for movement on that particular stock. And even though we know that because it's an uptrend, many times the sell on-field orders will be canceled, and those red UFOs may end up not working well, and price may go through. Well, the reality is that it's not a good beginning to begin the trade with those red UFOs too close from the green. Normally, you would want to see a little greater space in between UFOs. Okay, so we're going to move into the directionally short trades, so hopefully we'll be able to find setups that make more sense. And with Citrix, you can see we are dealing with a downtrending market, but unfortunately, we don't have anything red. We have no red UFOs. If I switch to KR, Kroger, definitely the trade setup looks powerful. Red UFOs up there, downtrend, and the opposing green UFO is quite far down. So it's looking good for a powerful trade, even though unfortunately we are quite far from 29.33, which is the entry point. Okay, so this is a stock I would say to keep in your radar, but not for today. NWL is the next pick that we have, and this one I have to say that looks quite interesting. The only thing I'm not too appreciative of that stock is the price of the stock itself. It's a $15 stock, $15.49 to be precise, and obviously, you know, when a stock is so cheap, to make the trade to be greatly profitable, probably you need to load yourself with a bunch of contracts. And again, I rather trade stocks where the price point is higher, so I could do the trade with less contracts per trade to minimize my commissions. Okay, so if I got really nothing at all, I will come back to NWL, but right now I would not look at NWL as my favorite pick. NXPI could be a valid candidate as well, but unfortunately the red UFOs are very far away. And then I'm going to check on WB, and WB will provide me, actually the setup looks very high probability with so many red UFOs. It's just ridiculous on how many red UFOs we have on top of each other, overlapping each other, meaning that, you know, it's very likely that this market will fall. But the problem is that very close, again, we got the green UFOs that probably create a situation where this market may be moving sideways for a while. So not ideal when it comes to the directional trades. Okay, so we could certainly come back to NWL and maybe plan on a trade on the NWL, but what I'm going to do is to look at the neutral and the non-directional, and if we find quality trades on those, then we'll focus on those. If we were to find nothing at all, then we can always come back in NWL. Couple of comments before I switch to neutral and non-directional trades, and I'm kind of like a little bit going straight to the point here because we started the session with delay, and obviously I want to be respectful with time. So I'm a little bit of, you know, in rushing mode. I hope you don't mind if I go a little fast today. But the point I wanted to, the couple of comments I wanted to share with you is, number one, that finding high quality directional trades normally is more demanding than finding high quality neutral or non-directional trades. And the reason why is first, because being precise with when to enter long, when to enter short, when to take profits from a long, when to take profits from a short, that level of precision needed for you to trade directionally, it's always more demanding that non-directional trades or neutral trades where you don't care where the stock is going. The only thing you care about is where the stock is not going instead of where the stock is going, right? So you always need, you always have a greater demand when planning the directional trades. So the translation of what I just said is that many times you will find yourself as a trader running a scan, getting a collection of symbols to plan a directional trade, and when you go over the symbols, the result is I didn't find any trade I like. I didn't find any trade that meet my plan, right? So that will happen often when you plan on directional trades, and it's not because you're doing anything wrong. It's just because to trade directionally will make you very picky, and you better be, because you have to be precise, and therefore you have to be very demanding and very selective with the trades. Okay, so in this case, out of the Lily trade for long, and then the Citrix, KR, NWL, NXPI, and WB trades, none of them were that amazing. The only one that could qualify is NWL, but again, the price of the stock was quite low. We could do it, but it's not ideal. Okay, so what I'm going to do is stay in that selective picky mode, forget about directional trades, go for the neutral ones, and only if I didn't find anything with neutral and non-directional, then I would come back for NWL, okay? But again, when doing directional trades, you have to be super demanding. In general, trading, it's something that we do, in a way where we are always very selective, but when you are directional, even more, okay? So, next one. Neutral long trades. Okay, so now we are talking about ABBV. Okay, and the first thing I want you to realize, and I always say that, but I need to repeat it just in case, is that when you look at all those stocks that we have in neutral long, neutral short, and non-directional, the three filters in the bottom part, all those stocks happen based on how the scan is set up. All those stocks will provide you with options that are highly priced. And that may have a reason to be, which is the earnings reports to be too close in time. So, we want to make sure that that's not the case when you do a trade. So, for example, if I look at ABBV, what's the date? The date is April 25, now it's April 12. So basically you have a week to do a trade with 1 week. Could work. What about ABT, Abbott? If I look at Abbott, we are talking about April 17. That's 5 days from now. That doesn't work. Okay, so Abbott, we will ignore it. What about AXP? So AXP, that would be April 18. That's 6 days from now. Is less than a week. So we would ignore it, So again, you get my point, right? So be ready as we go over those stock symbols that in many occasions, okay, we're going to find those situations where we're going to have to not to execute the trade because of what I just said, because there is a reason why those options are too highly priced, and the reason may be the earnings report, and an earnings report may always create a gap moving against you, and of course this is a direct contradiction with being neutral or non-directional. The last thing you want is a gap, okay? So if any of those stocks reports earnings too soon, we will ignore it, even though the scanner is giving it to us in the list. We will simply ignore it, okay? So let's begin with ABBV, okay? And also, out of experience, I mentioned this a few times in the past as well, that, you will get to understand which stocks are more liquid than others too, right? So normally you could also be selective by only looking for symbols where options are greatly liquid, okay? But anyway, so let's begin with ABBV, and that particular stock, it's in a minor uptrend, okay, not too strong as an uptrend, coming into the green UFO, okay, and for me to plan on a neutral long trade, I will want to look at the 60-minute time frame and see if in that time frame I do have anything that is likely to stop that stock from falling, because this stock is down by 1.63%. Because remember, this is neutral long, And neutral long basically means that the plan here would be to do bull put spreads. And bull put spreads is a type of credit spreads where you would sell a put and then you would buy a put below the put you sold. So if you sold, let's say, the 79, then you would buy, let's say, the 78. Okay, and therefore, basically, by doing that, you don't care about how high the stock will go. You simply don't want the stock to go down too much, right? So what you care about is the stock not dropping too much. That's why you are not purely long, you are neutrally long. You just want it not to fall too much, right? So how far you want it to fall? Well, up to the put you sell. If you sell the 79, you are okay for the stock to fall up to 79, but not beyond that, okay? So in this case, okay, in this case, we do have multiple green UFOs. These, you know, the stock opened below the above UFO. So, you know, this above UFO, just forget about it. It's like it doesn't exist, because since the stock opened below, well, obviously that directly means that those orders were traded overnight, or they were simply canceled. So there is no UFO there, but that one is here, and as you can see, it's working well. But again, because this one is already working, so many of the unfilled orders got filled. So then you will want to rely on the next one, and the next one is located at 77. So let's load an option chain to see if you were to sell the 77 put, okay, if you were to sell the 77 put, how much would you get? Okay, because you probably remember, let me load some of our notes. So loading here. Okay, everybody with me, right? Yes. Okay, yeah. So now, what do we have? Okay, so with ABBV, we were talking about let me get again the earnings report. ABBV. So we were talking about April 25, right? So when looking at the various expiration dates available, we got 12, 18, 26. So then, of course, we need to be using expiration dates prior to the report, which is 25. So then we're going to be using the 18. Okay, we're going to be using the 18. And we're looking at the 77. Well, that option, it's paying around 28, but with a pretty wide spread on that expiration date. Okay, so it's not really ideal, because we may get the 25 minimum we need. Again, 35 is better. And on top of that, when we see that spread, really, it's not looking ideal. Okay, so what we're going to do, it's pass on ABBV and go for another stock. In this case, we said not Abbott. I'm going to look at American Express. Okay, so with American Express, AXP, again, I want to refresh my mind of what the earnings report is, which is April 18. Actually, being April 18, well, automatically, I'm just going to pass, okay? Because April 18, especially because it's before market on April 18. You guys see that here? Before market on April 18. So, you know, if I was to use April 18 expiration, actually, I would have the earnings report happen, and therefore the potential gap to happen prior to the expiration. Okay, and we don't want to do that, correct? So then AXP would be a trade that we would not use for this trade. So what about CSX? So if I look at CSX, okay, so CSX Corporation has earnings on the 16th, so that one would not work. What about EA? Electronic Arts is May 7, so that one could be a candidate. So let's take a look at the chart setup, okay? Let's take a look at the chart setup to see what we have. Well, the chart setup on the daily time frame is not encouraging for a neutral long trade because we have a lot of red. I will look at the 60-minute time frame to see how much green we have. Yeah, so I'm not excited, okay? I'm not excited because we only have 2 greens in the 60-minute time frame, while we have plenty of red on the daily time frame. And obviously that could be a major force pushing that market down. Since we are neutral, that's fine, but we are neutral long, so then it's not fine. Okay, so EA will not be a valid candidate, so then we would switch to eBay. Okay, this is the process that you guys could run every single day for yourself. Okay, I'm running this process in front of you when we do the get-togethers, so that way you can mimic what I'm doing for yourself during any other day where we don't do the get-togethers. Okay, so April 23 is the earnings report for eBay. Okay, so April 23 is good because it gives us the opportunity to use April 18 expiration, which is next Friday. We happen to be on the daily time frame. We happen to be, you know, I would not say far, but certainly not close from the rate UFO, meaning that the force that may push this market down is not about to happen immediately yet. So what I would need to check is the 60-minute time frame to see if in the 60-minute time frame I do have green UFOs supporting this market to remain, you know, moving up or at least not falling down. So I got a green UFO right here, which is where the price turned today. Okay, so nice one. But of course, when you do neutral trades, you want to rely on a few more. And therefore, I am tempted to use these ones here below, the 33s. But before I do that, I also want to look at the pre-market and post-market data. That's giving me 54% probability, where the regular session data is giving me 50% probability. So it seems that the big players trading eBay are indeed putting a lot of trading effort and pretty significant amount of buy and sell orders in pre-market and post-market hours. Okay, so I'm gonna use that green UFO located at 33.5, okay, as the UFO I care the most about. Come back to the regular time session and notice how I have these overlapping UFOs. So I'm just gonna bring my line slightly down, and basically I would be expecting this market to remain above 33.26, okay, for some time. My only concern as I look at the option chain, okay, load it. Okay, let me reload it just to make sure I have the right one. So my only concern when it comes to the option chain on eBay as I load it is that since it's not a high price stock, it's a $36 per share stock, I have certain level of concern of how much I'm gonna get paid for those puts, you know, because 33 puts, given the fact that the price of the stock is 36, it's kind of 10% down, right? So I would expect those puts to have, you know, very little value, since we are talking about puts located 10% down compared to where the price of the stock is. And if I'm wrong, this is going to be a fantastic trade. So yes, well, unfortunately, I am right. Okay, that would pay for. Okay, so wait, you know what? Good setup, but not the right time. So let's go for the next one. So the next one would be LB. So I'm loading LB, looking at the earnings report as well. LB, that's May 22nd. So this gives us plenty of time. Now I'm you know, when looking at the 60-minute time frame, I got nothing green. So yeah, so that would not qualify. MDCO is the next one. So again, MDCO, looking at which is April 24. Well, looking good in the sense that April 24 is after April 18, looking good in the sense that we have green on the daily time frame and no red anywhere close. So let me check the 60 minutes. Okay, because the trade setup may be okay. In this case, I'm sure some of you are reading my mind again. You are probably envisioning that I'm going to make a comment when it comes to the price of the stock, which is only $27 per share. So let me see what will happen if I look at the 26 puts or something like that with April 18. 26 puts are paying, well, actually the spread is humongous. Okay, so we're going to go for Netflix. Okay, and you can see, I just keep going through the process. The moment I see something that is okay, and Qualcomm is providing us a good setup in the sense that we have the green, we don't have the red. I also appreciate better the fact that the stock is a $56 stock instead of $20 or $30. So let's check the 60-minute time frame, because that will be the very, very important part here with Qualcomm. Okay, so we got 55% probability with the regular session hours data. If we add pre and post market, we got 52, which means that the pre and post market is less relevant than the regular session. So we'll stick with the regular session. And in a perfect world, you know, I would want to set up a credit spread below all this collection of green UFOs. So I'm not sure I'm gonna get premium enough to shoot for the 24s. If I don't, maybe I go for the 54.5. I would first like to try the 54. And I'm not sure if I said 24, I meant 54. So let's go for 54. Again, since the earnings are happening on May 1st, I could certainly go all the way to April 26, okay? But of course, in a perfect world, you go for the shorter expiration date as possible, and 54.5, it's actually paying us 55, okay? Which 55 is more than 25 or 35, which is our minimum requirement for premium. Okay, so I'm not saying that we have a trade yet, but I am saying that it's looking okay to potentially have a trade. Okay, so let's do this. Okay, we are going to plan on a bull put spread made of selling the 54.5 put and buying, plus is for buy, minus is for sell, and buying some other put below the put you sold. So maybe we sell the 54.5 and then we buy the 54. Or maybe we'll do the 54.5 and 53.5. We'll decide that in a minute, okay? But for now, we are planning on a credit spread. To be more specific, we are planning on a bull put spread. That's how it's called in the world of options trading. Guys, I've been talking quite fast to try to catch up a little bit with time with the technical issues we had at the beginning. Could you please give me a little bit of confirmation that you guys are with me when it comes to the process I've been following up to this point, and you are with me when it comes to why am I planning on a bull put spread on Qualcomm? Is everybody with me with why it made sense to plan on a bull put spread? Because you have the green UFOs, because you have nothing red close by, because the trend was up based on the scanner, because the options were highly priced but earnings is not close. Everybody with me? Just give me some feedback, guys, because I am aware that today I'm rushing it a little bit, guys, just to catch up with time. And I don't want to leave anyone behind, okay? I would like everybody to follow the process, okay? So thank you, guys. Thank you. And I'm going to give you a double thank you, guys, okay? Thank you for confirming this, but also thank you for your patience today, guys. Good. Yeah, the IV, it's already scanned. So it's already part of our scanner. So you could certainly go ahead and activate your IV to check what the IV is. Okay, and I could certainly do that. So you get to see it. Okay, but you will see how the IV, it's high. You see that? Okay, and again, it's a step that you could skip, because it's already built in your scanning process, okay? So again, I try to give you methods, guys, where you save time, okay? Now, it's not gonna hurt you if you wanna be a little extra perfectionist and look at it manually, and it's not gonna hurt you, okay? But at the same time, I'm trying to give you processes, guys, that not only stack odds in your favor, but also save you time. Because in the end, this is the problem of being human, right? We are busy people, we get committed to things, we got responsibilities, we are all always lacking time, okay? I mean, that's the majority of people, the majority of us, okay? So anyway, let's take a look at this, okay? Because again, now it's looking like we have a trading opportunity that is, looking okay to plan. So what did we do? We checked the earnings calendar, okay? Remember the earnings calendar, stated that we can go as far as May 1st, but it seems that we are finding premium that is good enough using April 18, isn't it? Okay, April 18, right? Looking at Qualcomm, with April 18, the 54.5 was providing more than 25, which is what we normally go for. 25, 35, it's, what we call the minimum requirement. Okay, so therefore, step one, check the earnings calendar, okay, and then use a short expiration date, okay? The shorter the better. We're going to be using April 18, of course. We cannot use April 12 because it's today. So imperative, it has to expire before the earnings date. Great, because the earning date is on May 1st, okay, and we are using April 18. The shorter the better, but sometimes you don't get premium enough. The minimum is 25 to 35. Well, in this case, we got 58. Okay, so we are fine with April 18. Okay, so now step 3, we need to focus on the protective strike. And of course, if you were to pick, okay, if you were to pick the 54.5 and then you pick the 54, okay, and you just focus on those two strikes and you build a spread which is 54.5/54, well then, the most you will risk in this trade is the difference between strikes, which is 50 cents minus the premium you got paid, right? So if you get paid 58 to do the spread, and, sorry, let me rephrase that. If you get paid 58 to sell the 54.5 put, and you pay 48 to buy the protection, which is the 54 put, so you get paid 58 and you pay 48, that means that you would have got paid 10 cents, right? And if your risk is 50 cents and you get paid 10 cents to assume of risk of 50 cents, what does that tell you? Well, that tells you that your risk is 50 minus 10, 40 cents. Okay, so, in one hand, the closer the strikes that you pick, the better. Okay, the closer the strikes that you pick, the better. Okay. But at the same time, the closer the strikes that you pick, okay, you will also have a lesser premium, a lesser net amount of premium per spread, because the closer the protective strike, the more you have to pay. For example, if instead of doing 54.5 and, instead of doing 54.5 and doing 54, I was going to do 54.5 and 53.5. Well, now I would get paid 58 and I would pay 40 instead of 48. And therefore, your total amount of premium collected would be 58 minus 40. That's 18 cents of premium instead of 10 cents of premium, which is the difference between 58 and 48, or the difference between 58 and 40. Okay, so not sure how I'm driving you crazy with all this little math, okay, but you can always watch this recorded if I went too fast, okay. In any case, we have rules on how to deal with this. So here it says that concerning a protective strike, it needs to produce a credit which is at least 15% of the difference between strikes. So if I was to do 54.5 minus 54, okay, that would be 0.50. So if I was to do 54.5, 54, which produces 0.50 risk, which is the distance between strikes, and we said we have a rule which is you need a minimum 15% of that. Well, 15% of 50 is 7.5 cents. Okay? Well, how much you get here? If you sell the 54.5 and the 54, well, you get 10 cents, which 10 cents is more than 7.5 cents. So guess what? It works. Okay? Based on this rule, it works. The problem, though, is that now the question is, how many contracts do you need to sell if you want to make a decent profit? Because if you get paid 10 cents, 10 cents times times 100, because you know every options contract represents 100 shares. So that means that you get paid $10 net per contract. You may need to pay $1 commission to get in, and let's say you leave it alone until it expires, so you're gonna make net $9 profit. So now let's say you want to make $500 profit. So how many contracts do you need to sell? You would need to sell 50 contracts or more than 50 contracts to make a decent profit. So even though doing the 54.5 and 54 does meet our rules, the problem is, again, when you deal with stocks that are very cheap, many times, it does not provide credit enough to do the trade to be a little friendly. Okay, so what I'm going to do then, when that's the case, it's just test and see what happens if I do 53.5. Because if I do 53.5, so now I would be doing 54.5 minus 53.5. I have a full $1 risk. If I want to make at least 15% of my dollar risk, that's 15 cents. Okay, and the question is, okay, if I was to sell the 54.5 at 57 and sell the 53.5 at 40, how much would that be? And obviously, if you do the math, it's 17, which 17 is more than 15. So I could do that too. Okay, and now the beauty is that instead of making 10 and paying $1 commission, so you make $9 net per spread, now you would pay 17, you will pay $1 commission, so you will make $16 net per spread. Okay, now you also have more risk. Okay, but you could now do the trade with less contracts for a greater profit. Okay, so this trade is valid. Okay, I would say probably only adequate for traders with a smaller account size, because if you have a small account size, you're gonna use few units anyway, and you will want to take few contracts anyway, because you are taking lesser risk because the account size is less. So probably for some of you guys that may be practicing these methodologies as you learn, or for some of you where you are not practicing but simply you have limited funds in your account, well, then I would say this trade is valid. For the traders with us today that may want to go for a little bit more juicy trades, I would say stick with me, because we're going to look for other trades and hopefully we'll find something a little more juicy, okay? But again, if you want to take this trade for practice purposes or because you have a small account, just know that, as I just said, this trade is valid. We are doing a spread using April 18, 2019 expiration date, where the credit spread will be made out of selling the 54.5 put and buying against, as a protection, the 53.5 put, okay? So screenshot time, I'll give you one, well, I was going to say 1 second, I'll give you like 5 to 10 seconds to do a screenshot, and then we'll keep going for more trades. Okay, so looking at some of your comments as well, and here on the comments box, let me see. Yes, yeah, very good, Sandy. Yeah, you are talking about the commissions, etc., etc. Yes, Kathy as well. Good to see you, Kathy. 100% with you on your comments, and I also made the same comments. Okay, and Dirk, thank you very, very much for the countdown. Yes. So again, not an ideal trade to really make nice profits, but for some of you that are in learning stages, if you want to practice, it's a valid trade. Okay. Good. So next one, SE. So what do we have with SE? So let me switch to the daily time frame first. Okay. This market is in an uptrend. We have nothing red anywhere close, no red UFOs for now. When looking at earnings reports with SE, SE is not a super liquid stock, okay? But the earnings reports are on May 14. So the key question is, this is looking good up to now for that stock to keep going higher. But again, you don't want to do this trade unless you have green UFOs. And the problem is that my green UFOs bring me down all the way to like $20 per share, and that's gonna make my trade again to be problematic from the amount of premium I'm gonna collect. Okay, we have seen that before. So I will pass Vodafone, $18 stock. So it's gonna be a little bit of the same situation. not super ideal, but we may have something here. Actually, we don't have data when it comes to reports for earnings for Vodafone, so I will not consider it because I do not want to trade in a way where I am blind. So WPM May 8, okay, that would be the next expiration day, next earnings report for WPM, and therefore I'm gonna load the daily time frame first. Stock in an uptrend, a little concern about the red there. Okay, a little concern about the red, a little too close maybe, and yeah, so not super excited about the longs. So let's move into the shorts. Okay, so shorts, we have a few options here for short setups. Okay, the first one is AA. AA typically is the first stock that reports earnings. So April 17, that's too close. What about AXL? May 3, so AXL may qualify. Take a look at that one beyond April 18, that's all. So we are talking about a stock now, $160+ per share. So this is the type of stuff, you know, that is great, okay? Because you can do a lot of things here. Now, we are very close to the red, okay? Very, very close to the red. So concern there. I would, actually, wait a minute, I just got confused here. We are looking for neutral shorts. Yes, so close to the red is good. So let me take a look at the 60-minute time frame. We said up to May 2nd, so that's good. Okay, that's good. And if we were to lean against anything here, it seems that we will need to be using that red UFO located at 168 plus. Okay, 168 plus. So I just want to look at pre and post market data. So US pre and post market data, the regular hours give me 49.61, pre and post market give me 41%, so it's not relevant. So I'll go for regular session, and we are talking about 168.22. Okay, 168.22, 168.45. So let's see what we have in the option chain with CI. Okay, looking at expiration days such as April 18. So we look at the 168. We need to go for 170, and we are talking about 35. Okay, so 35. Yeah, the problem is that it will not work. Look, if I do, we said 170, yeah. If I do 170, 172.5, I'm gonna get paid 34. I'm gonna have to pay 15. That will give me a premium total of 19 cents, which is the difference, okay? And remember, this needs to be 15% of the difference between strikes, and the difference between strikes is 2.5, which is 170 to 172.5. So 15% of 2.5 is 37. So I will need minimum of 37, and I am being paid much less. So April 18 will not work. I could go and move into the April 26. I could do that. And if I was to do that, let's see what happens. Then I would do 89 and 49. So now I am being paid 40 cents, where what I need is 37. Okay, so now we are talking about something doable here. And therefore, the idea of this trade would be to buy the 172.5 call and sell the 170 call. Okay, this would be done using April 26, 2019 expiration date, knowing that the earnings are on May 2nd, 2019. Okay, so we are using an expiration date that is going to happen after the options have expired. Okay, and that stock is in a downtrend in the daily time frame, etc., etc. So we are not likely to be above 190 anytime soon, and we are giving ourselves more or less 2 weeks of time from current date all the way to April 26 to be in a trade where we would sell the 120 call and buy the 122.5 call against. So the way you would execute this trade would be by right-clicking, okay, select Analyze Sell, and you would pick Vertical, Analyze Sell a Vertical. The moment you would do that, you would be offered selling the 170 call and purchase the 172.5, which is exactly what I had written on the screen on the right. Correct? It's exactly the same thing. And that's what you want to do. And as you can see, if you go for midpoint, that would pay you 40 cents. Okay, 40, 36, it keeps moving. Okay, if you go for the bid, it would be 47. If you go for the ask, it would be 25. Okay, so of course, the idea would be, ideally, to get either the mid or maybe a little bit of an improvement. So maybe you want to go for those 40 cents that we talked about, okay? For you to place an order to get filled at 40 cents, you would just come in here, of course, select the amount of contracts that you want to use, okay? In this trade, I'm going to use one contract, okay? You will want to select the amount of contracts that you want to use. You would click on the three little dots, select trade, and where it says 27, you would change that and input 40. Okay. Let me do this. 40. Here we go. 40. Okay. So it's better actually to use the up arrow, down arrow, because you want to make sure you got the CR there. Okay. So that way, the platform understands that you are selling for a credit. Because if you don't have the CR, the platform will understand you are actually willing to pay, and you are not going to have to pay for it, but you would be selling it at market price, which is 26 instead of 40. Okay, so you will go for 40. Okay, and then you will just click place order, and then yes, and then yes, and then this order is now in your platform. I have not been filled. That's why it only says received. Okay, it doesn't say filled, it says received. I have not been filled because the current price, okay, as you have seen, is more in the 36 more than the 40. Okay, but if you just wait a few minutes, you have a decent probability of being filled on this trade, and therefore for us to be able to track this trade into future sessions, I'm just gonna add a vertical line here, and I'm gonna make a copy of my chart so I can keep it, because sometime in the future we'll do sessions where we're going to be reviewing trades, learning from certain executions, etc., etc. We'll do that in the future because we're still learning stuff and we cannot do it. It's just a little too soon, but we will certainly that sometime in the future. Okay, so let me take a look at your comments, questions here, guys. I plan to keep running for another 15 minutes. Okay, I plan to keep going for another 15 minutes. So that way we will complete a full 1 hour session today. Of course, I understand if some of you have to go because obviously I am running late today. Okay, but just know that's my intention. So let me see. Yes, Kathy, I hear your comment here, and it's a pleasure to have you. Yes. Good. So I'm just looking at all the comments here. Yes, Kathy, when I was talking about to close, basically, since we are planning on a neutral short trade, you want to make sure that this market is not going to go back up. Okay, you don't really care if it drops too much or it stays the same, but what you don't want is you don't want it to go back up, because even though you're neutral, you are short. Okay, so what is the best way to make sure that this market is not going to go back up? Well, the best way is to have red UFOs. Okay, so the fact that we are close to the red UFO in the daily time frame and we have red UFOs in the 60-minute time frame, all of these increases the probability for the stock to go down and not to go up, because again, we don't care how deep it's going to fall, but you don't want it to go up. Okay, that's the key. So let's keep going, guys. Let's keep going. And what I'm going to do, I mean, you could certainly keep working on the list of stocks I have here, but I would like to also give you an example of a non-directional trade, okay? So instead of looking for directionally longs or directionally shorts or neutral longs or neutral shorts that we have done up to this point, I am now gonna change my hat one more time, and now as a trader, I am looking for purely non-directional trades, okay? So markets likely to remain sideways for a while, okay? That's the idea. So I have all these lists that my scanning process has provided me with, and I would like to check Netflix. I would like to begin with Netflix to see if Netflix is giving us something good. I mean, the only thing with Netflix, it's a stock, which a certain value is a 300 plus stock, and guys, this is really strange. When I type in here, it's just inverting. Very weird. Anyway, so yeah, so Netflix is not gonna work because of the earnings date is April 16, is too close, okay? But the comment I was going to make is that being a $300+ stock, Netflix is normally a great candidate for these trades, okay? Having said that, you do require a larger account to be able to execute those trades precisely because the value of the stock is more, okay? So then let me check on Johnson & Johnson, for example. Okay, so looking at Johnson & Johnson, April 16, sorry, so it's not going to work. What about TXN, Texas Instruments? So TXN, April 23, so TXN could work. So when looking at TXN in the daily time frame, looks like this, okay? So we have red above and green below, quite far from each other. So kind of like TXN, we could say that TXN is a little bit of in the middle of nowhere, okay? And if I was to activate my UFOs, okay, so 42% is the probability I get with the pre and post with the regular session. If I activate pre and post market, I got 44, but I got no red UFOs. Okay, so I'm not excited. I am not excited because the figures for probability are quite low, and I don't have red UFOs. So I'm not gonna be able to plan on a trade on that particular stock. What about UNH? So when looking at UNH, again, the website is getting me to think. April 16, okay, so UNH is not going to work. By the way, we started earnings season recently, so many of the stocks, when we start earnings season, which is every 3 months, many of the stocks, okay, will have very high price options because of the earnings, okay? So you will have many no's, okay, when you are planning trades, which is good because we need to be selective, okay? So what happens with Adobe? Adobe reported their earnings in the middle of March. This is quite strange. And I'm going to choose to not to believe this because it seems that Adobe reported earnings in March and Adobe is not going to report earnings until June, which is 6 months. Normally stocks report earnings every 3 months. And there could be a case where that's the case, but because it's strange and it makes me feel that I'm lacking a little bit of understanding of the trade, then I'm just not going to take it, okay? So what else do we have here that could be a good candidate for a non-directional trade, okay? So let's take a look at AMGN. Amgen, April 30, okay? So that could work. AMGN is not super liquid, okay? And an iron condor requires of 4 units, okay? So lacking liquidity is not super ideal, but in the favor of AMGN, this is close to $200 stock, okay? And that is ideal because with few contracts, you get plenty of premium. Okay, so what do we have here? Well, something I like very much here is massive collection of UFOs overlapping each other in many different places. Okay, so that's pretty cool because that is likely to produce many bounces. And bounces means time passing and the stock going nowhere. Okay, and that's ideal for non-directional trading. So now, let's try to project a little bit of the price of the stock from here to here, for example. And by the way, before I do that, 51% is what I get with regular session time. Let's look at pre and post market. I got 47. Okay, so I'm going to ignore pre and post market with AMGN. No need to keep it under consideration. Let's go ahead and use current price and project this until that UFO. And then if I was to project this to the upside, that would bring me to where that red UFO is. Okay, so basically what I just kind of found out by using a little bit of a projection with my drawing tool is that if I was to sell calls here while I am selling puts here, I would be kind of selling options above and below price levels, which is 204 and 180, which those price levels are price levels where Amgen is not likely to go there anytime soon. Okay, so that would be potentially a very good and valid candidate for a non-directional trade. Okay, now having said that, we need to look at the option chain to see if we are being paid enough. Okay, so I'm going to have to reset my option chain here. So restarting the option chain. Okay, we'll be looking at the Amgen Iron Condor, and if it works, we'll take it. And if it doesn't, then we won't, and we will conclude the session after this trade. Okay, guys? Okay, so here we go. So let me input the symbol. Here we go, Amgen. Good, so we have multiple expiration dates. Remember, we said earnings are on April 30, so I could technically use up to April 26, but we also know the shorter the expiration, the better. So let's see what we have. We are looking at levels above 205 and levels below 179. So 205 don't pay enough with April 18. So then we cannot use that one. So April 26, 205 also doesn't pay enough. Remember, the minimum we have to use is at least. Yeah, I'm just looking at some other data. I was just multitasking in my brain. We need to look at least 25 is the real minimum. Ideal is at least 35, and we got 15. Okay, so it's not going to be good enough. Okay, but I would suggest that you guys, I mean, we're not going to be able to execute this trade now, but I would suggest that you guys watch it into the beginning of next week and so on, because I do notice, okay, I do notice a couple of things. First, a little bit of lack of liquidity when you look at the 180s, lack of liquidity with the 41 and the 117, and you know there is a reason for the lack of liquidity, okay, which is the fact that the 18th of April is the monthly expiration date and the 26th is a weekly expiration date. Normally the weeklies are less liquid than the monthlies. Okay, so this is one of the reasons. But the point I want to make is that we know that the distance between 205 to current price and 180 to current price is more or less the same, kind of. But still, notice how the 180 provides you a midpoint credit of 79, where the 205 gives you a credit of 16. So there is a lot of buying of puts here that got those puts to be of a much higher price, you know, in ways that are a little, I would say, too exaggerated. Okay, so I would suggest to watch it because the markets may normalize a little bit. Okay, same thing happens with 18, where you have 44 on the 180s and you have 5 cents on the 205, and it's the same distance. And we know the calls normally got less premium compared to the puts, but still the difference, I believe, it's quite intense. Okay, so I would suggest that you watch it into the beginning of next week, because you may see a little bit of a normalization coming into the options chain, and it may give you an opportunity to plan on an iron condor. Okay, but unfortunately today I will not be able to, because the market data that we have is not giving us the minimum 25 to 35 cents that we need to be able to sell an option. Okay. So anyway, let me take a look at your final questions here. Mark, you would like me to share my opinion about JPM? Yes, of course. What is your time horizon, Mark? Would you mind to share if you are thinking of JPM as a quick trade or a longer term trade? What's your question about JPM, if you wish, and then I can address it properly. And Sandy, Jose, I use TradingView. Is it possible my zones are not the same as TradeStation? Yes. Yes, on Sunday we'll talk about calibration, Sandy, and also with TradingView. Let me do this. Okay, so with TradingView, so data feed, then everything changes. Okay, for example, if I load JPM, okay, so take a look at, so you have everything, right? And by the way, everything is going to be almost the same, okay? But you may have some differences. And you can see that on the upper right. If you click on that little exclamation sign, it says real-time data for JPM is provided by CBOE BZX exchange. So it's real-time data, but only coming from one exchange. Depending on how you have your data feeds set up with TradeStation, you may have the real-time data coming from all exchanges as an aggregate data feed. And if that's the case, you may have slightly different price points on the chart, and therefore it may look slightly different. Okay, so yes, the answer is yes, that could be the case, Sandy. And again, not a big deal, because in the end, if you are doing a trade where you're selling options above or below a level, you know, it's gonna be about the same. But you could certainly see a little bit of differences, okay? And sometimes, you know, you can even have one UFO that doesn't show up the same way. Could be, okay? Of course, we cannot control the data feed. It's whatever you have subscribed for. If with TradeStation you are subscribed for full data feed, that's one thing. Yeah, I meant TradingView. I'm not sure what I said. So in the session, let me rephrase it, Sandy, just in case. In this session, I am using TradingView right now, and I am also using TradeStation, right? Right now. So in both cases, okay, the algo that is being processed is exactly the same, but the data feed may not be the same, because the data feed you have on the screen, meaning that the data loaded on your charts, depends on the type of subscription that you have with your broker. So you may have a subscription with TradeStation, which is the normal thing would be that you have a subscription where you get full market data, and therefore when it comes to stocks like such as JPM, you have all the data coming from all the exchanges, and therefore the price points you have on your chart represents that data coming from all the exchanges. With TradingView, you could certainly subscribe to that full data too. You could certainly do that, okay? So if you go to the homepage of TradingView and you go more and you select pricing, okay? Okay, you select pricing, and then you scroll down all the way to the bottom, right? All the way to the bottom, all the way, until you get to data, right? So there is a section here with extra data. This is available for purchase on any suggested plan. So you can have the free, you can have the free basic plan that you have with TradingView. You can have that, but then to that plan, you could add real-time data for some exchanges. For example, if you were to add the New York Stock Exchange real-time stocks, the NASDAQ real-time stock, and you were to add the ARCA real-time stocks, okay, you know, you will be paying 2 plus 2 plus 2, you will be paying $6 per month on market data, and now you should have on the screen the same thing as TradeStation, which is the data coming from all the exchanges. If you don't subscribe to that, which is fine, and I would say it's more than enough, you have, you know, the data from the CBOE BZX exchange, which is not all the market data, but is quite relevant. Okay, so you would be able to see most of the UFOs and etc., but you may have slightly different price points. Okay, for example, here 111.74, you know, is the bottom part of this UFO band. If I was to look at the bottom part of this UFO band, is 111.87. Okay, so 111.87 instead of 111.74. Why? Well, actually, wait a minute. Why? Because I'm using a different time frame here. So let me use the same time frame, daily and daily. Okay, so let me pick that one, and well, actually, right now, exactly the same one, 111.74. Okay, so but there will be cases where you may have a slight difference, right? And why is that? It's because of the data feed that you're using. So in most cases, it's gonna be the same, Sandy. If you want to be super perfectionist, you can always, you know, subscribe to real-time data with TradingView, which they will charge you a little bit for that, and that's it. Okay, it really depends on the type of trading you do. Certainly, if you do non-directional trading, it's really absolutely not needed. Okay, because you know it's non-directional trading. You don't need to be precise. Okay. Anyway, so back to Mark, and we'll conclude the session here. So. The 60-minute time frame of JPM. So what do I see? Well, Mark, my understanding of what's happening to JPM right now is this market is developing a very strong uptrend. A lot of the on-field orders that I could see were available a few days ago. So let me rewind this market, you know, to April 10th, for example, 2 days ago. Okay, so there were red UFOs, okay, a couple of days ago, and those red UFOs have been taken away. In other words, those orders have been canceled. Okay, and when does that happen? Well, big players in the market, they will cancel their orders when they are not interested to sell, which means they believe it's going to go higher, or when they're interested to buy, which means they believe it's going to go higher, right? So long story short, this market is now developing a very strong uptrend. The problem is that it went a little too high, too far, too fast, and you will need to wait for this market to come back to those green UFOs to purchase. And, you know, potentially after this comes back, maybe it takes 3-4 days to come back here, you would purchase expecting it to continue higher. Okay, but at the moment in time, you know, there would not be anything to be done from a directional point of view, and from a non-directional point of view, then I would need to look at other parameters. Okay, and since it doesn't show up in our list, then I would suggest not to do anything with JPM, because it means that either the trend is strong, which is the case, or either the options are not highly priced enough to take the trade. Okay, so Mark, I would suggest to forget about JPM in that case. Okay. Sandy, yeah. Again, I get your point. You know, if you compare, you will see differences. Again, you know, whatever platform you use works with whatever market data you plug into, right? So if the market data, if the feed is different, you will get different results. But again, you don't need to worry unless you really need to do very short-term trading, right? If you were to be doing like, you know, trading the 5-minute time frame with futures, then I would certainly suggest that you subscribe to real-time data. If you are doing non-directional trading, or even if you do directional trading using daily time frames, you know, it's okay. Okay, I would say we don't need to be that perfectionist. In the end, it's up to you. Okay, if you want to be perfectionist, it's not gonna hurt you, but then you need to pay for the data feed. Okay, so that's why I'm trying to give you an option where you don't have to make that expense. Okay, even though it's okay. Dirk, last question. Jose, why do you have different percentage numbers? I have 57.4 on JPN and you have 52. Well, I don't know, but probably, Dirk, it would have to do with the calibration. So since we're going to talk about that on Sunday, maybe it would be a better time to talk about it then. Yeah, so Sandy, no, I only do options and investing. So then you are fine, Sandy. Yeah, you don't need to overcomplicate this, okay? And I get your point. I'm very perfectionist myself, but really, it's not gonna be needed, okay? Yeah. Babu, is there a short note on what kind of spreads each cans are using? Well, Babu, you will need to go ahead and catch up with the recordings that we have before. Obviously, I cannot summarize it in today, and we also need to conclude the session. You know, I'm 38 minutes late to conclude today's session out of the technical issues, and also today's session is about trading, not about sharpening. Okay, so please catch up with the recordings. I know for some of you have some trading experience or options experience. You may feel a little like, you may feel a little lazy about watching videos of stuff that you may know already. But this is the only way to guarantee that we speak the same language when we conduct the trading sessions. Okay, guys, so I'm counting on you there. We agreed many times in those sharpening sessions that this is teamwork. So I need to do my part, but you also need to do your part. So if you happen to have joined us, let's say 2 weeks ago, 1 month ago, but we have sessions recorded since November last year, so you have to do some catch up, okay? And I'm counting on you to do that in order for you to be able to excel, okay? If not, I'll do my best to respond your questions, to give you answers, but at the same time, some of my answers will have to be partial because the complete answers are recorded and I cannot repeat myself, because if I do, then we don't progress the way we need to progress, okay, guys? So I'm sure you understand. Anyway, guys, thanks for joining me. Again, I want to apologize one more time for the technical issue. It's always uncomfortable when this happens. I'm not talking about myself only. Obviously, I'm talking about your side. You're watching and you're like, well, so is Jose gonna go back? What happens? We don't hear his voice. What happens? We don't see his screen, and you're just waiting for me, guys. So I really appreciate your support in that sense. The good news is that I know why it happened. So that means it won't happen because of that on Sunday. Okay, so we'll be fine. See you on Sunday, my friends. Take care and keep up the good work. Loving the emails that you guys send, and loving to see that some of you are really, really progressing, guys. Okay, so keep up the good work and see you soon, guys. Bye-bye. Take care.